Welcome to StockMarketFunding.com. I am going to show and explain to our new SMF MMT traders and our SMF senior traders and people that will be watching this video as they're watching it as I'm doing it live, but now they have a way to go back. That's who these videos are created for. And they're also created for the public, at least knowing that SMF knows what they're talking about. Because we do. And we have all the live trades and everything and all the facts to prove it. So remember, all the talk in the world doesn't mean nothing, but the action that we put together before the event is the proof of the pudding. This is called the VXN Nasdaq 100 Volatility Index. When we broke out on 8/24/2008, when we made that top on 10/19 of 2008, when you make the high tops like that in the fear indicator, everyone's out of the market. They don't want nothing to do with it, and that's when rallies occur. So what happened is we had that long rally off of the 09 lows right to there, and we broke up to 50 here. And when that occurred, that's when the index, the Nasdaq 100 index, is the opposite of the VXN. So when this goes down, this goes up. This is a fear indicator, just like the VIX, except it's tied in to the Nasdaq 100. And basically, what I'm going to show people here is that just like the high there, they started, that's when new rallies start. We just made that high there, and this new summer rally that came down and hit 1700. I mean, we were way up here, folks, at 2000, and we were buying the 2000 puts up here, and we got the videos to prove it. Go back to in April on StockMarketFunding.com or YouTube and find it when we were shorting. Here we made a high, and as we made the high, new rallies have started again here, like they always do. New rallies start at new high fear indicators, folks. And there's a lot of other things, but I only have so much time on the video. All you have to do is stop by StockMarketFunding.com, and we can really get down into some conversations of true facts and how you put on your trade management positions. So basically on the index, we got a bullish thing going on here. We did not go into a weekly sell signal on the Nasdaq 100, which is, S&P 500 has 500 top companies. That's the Nasdaq index. Go read about it on our StockMarketFunding.com website. We have a university. Anything you wanted to ever know, you can find out there free. What I want to show people is we almost got to a weekly sell signal, and with that up bar and that bottom, they're trying to hold it from going into a sell signal. And basically everyone is believing in the earnings right now. See how that sell signal? Last time I got a sell signal, look what happened. Got a sell signal here, got another sell signal there, and we haven't had one since we had that buy signal that went all the way up here. And we're about to hit a sell signal. We're not there. And you've got an uptick here in that MACD. That's what that is. Moving average convergence divergence now. And yep, you put your plus 5.2, you were only plus 2.9. Well, just a few weeks ago, you were plus 25.66. And that's when I shorted the farm. And they went down in value here. And this sold off here. And that's why on any bounce it would sell off again, because of the declining, the declining MACD weakness and strength. They're trying to hold it. The earnings season has stopped it so far from going into a sell signal. And that's the Nasdaq 100. Now, on the other hand, let's get down to these facts. Is the fear indicator, when this goes high, that goes down. They're invert. Watch. Here, let's get it right up here so you can see the two now. When we broke out and went higher there, the NASDAQ 100 sold off to the lows. Since we put the high in and are coming back to test the breakout there, we have put a bottom in and we're rallying up here now. So basically, wherever I end up at support here, the lower this goes, the less fear there is and more complacency. And that's when there are going to be a lot more bulls in the market and less bears in the market. Lots of bears are in the market when this is at high levels. Okay, that's when the bears are in the market. Most of your bulls are always in the market when you're down at these historic lows. That's part of what SMF teaches you, is the balance ratio between fear, greed, complacency, and let's not forget exuberance. It's all about how you're going to position oneself. And if I'm going to hold up here, I'm limited up here. If I'm going to sell off here, I'm going to get a bigger breakout going that way. We're going to be watching it very carefully. What I wanted to tell you was that new bull trends get started at the peak of the bear trend. So when the peak of a bear trend is peaking in fear, that is, you're starting to try to get a new bull going at the same time, because that's how markets are calibrated. And it's also the psychological sentiment within the market and the behavioral transactions that occur in Wall Street. We're going to be monitoring very carefully as to this upside rally, based on more bulls would be coming in to support this. If this goes lower and doesn't break support, well, then a lot of bulls aren't in the market. However, if it goes lower here, many more bulls will be buying the upside breakout. And we're going to be monitoring it. Welcome to StockMarketFunding.com. NASDAQ 100 Volatility Index versus the NASDAQ 100, which is 20% weighted by Apple, Google, Priceline, Amazon. And once again, we will find out going in at the end of the month and the what's left in the earnings season, as if people really believe in the earnings season, this is going to go lower as well, and this is going to go higher there. And that means you want to be weighted on the long side of the market and buying at support more often all the time, because stocks will not break support when this is going down. They're going to hold support and they're going to bounce off. If they come down, they hit it, then they bounce higher and you trade it.